Could Solana really soar past $1,000? Or I mean, even beyond that? That's the big question we're really digging into today on the deep dive. Welcome, everyone. So you know the drill here. This show is all about taking your source material today. It's a really fascinating stack of articles, research, analyst reports, all focused on Solana, SOL, and distilling the most important bits, the key knowledge and insights just for you. Our mission today in this deep dive is to really unpack these super ambitious price forecasts for Solana. And maybe more importantly, try to understand the reasons behind these incredibly bullish projections. We're here to help you cut through all the noise and get right to the core insights that actually matter. Now, before we get into those big numbers, let's just, ground ourselves a little. Where does Solana stand right now? As we're recording this, Solana, or SOL, is trading at about $188.10. It's seen a little bit of an uptick recently, maybe plus 1.57% today. So that's our baseline, right? That's the starting point as we explore what some really sharp minds in crypto are predicting for its future. And look, this isn't just about throwing numbers around.
It's about trying to understand the complex mix of technology, market dynamics, investor sentiment, all the stuff that could potentially drive these pretty incredible games.
Yeah, and what's really interesting, I think, is that we're not just looking at one number. We've got this whole spectrum of possibilities, right? And each one seems to be backed by a different way of looking at things. You've got, like, the really detailed technical chart patterns trying to read market psychology. Then there's the fundamental growth of the actual Solana ecosystem. And even these big, sweeping influences from, the wider economy. So this deep dive gives us a pretty comprehensive, sort of multifaceted view of what could push SOL to heights that honestly might seem pretty surprising right now. It's about spotting the different levers analysts think could boost Solana's value.
Okay, so that's the journey for today. And to kick things off, let's look at the immediate horizon.
Yeah.
What are people saying about 2025? Because multiple firms, financial analysts, crypto specialists, they've put out some pretty significant projections just for the next year and a half or so. And these aren't just random guesses, right? These are like detailed analyses from different angles.
Exactly. And one of the more interesting ones for the near term comes from Investing Haven. They're pointing to a potential cup and handle breakout for SOL. They see a range potentially of $255 to $480 by the end of 2025. And like you said, it's not just pulled out of thin air. It's based on a classic technical analysis pattern, one that often signals, more upside is coming.
Right. The cup and handle, a lot of our listeners who follow charts probably know it. But maybe for folks who are newer, can you just quickly recap what that pattern is? Like, what makes it such a strong signal, especially in crypto?
Yeah, sure. It's definitely one traders watch closely. So the cup and handle, think of it visually like a teacup. You get this U shape, that's the cup. It forms when the price drops, finds a bottom, stabilizes, and then climbs back up to where it started falling from. This U shape, the cup, shows that buyers are stepping back in after a consolidation period. Then you get the handle, that's a shorter slight drift downwards or sideways. It's like the market taking a quick breath. Maybe some less confident holders sell off there. But then typically the price breaks out upwards from that handle. It's compelling because it suggests the market has kind of digested things and is now ready for another significant move up, often with more strength. And Investing Haven even mentions a potential stretch rally, possibly reaching $555 if things get really bullish. So it points to this shift in psychology from just accumulating to real upward pressure building.
Okay, so it's not just a sudden spike. It's more like the market building strength for a climb. Got it. But technicals are just one piece, right? BidGet, for example, they have a different take, based more on fundamentals.
That's right. BidGet's analysis is looking at maybe $300 by the end of 2025. And their reasoning. It's really focused on strong institutional adoption and just generally positive crypto market sentiment. When we talk about institutional adoption, we mean the big players, Hedge funds, asset managers, maybe even corporations putting SOL on their balance sheets. This is huge because they bring serious capital. And maybe just as important, they bring a sense of legitimacy. It signals to the wider financial world that, hey, this isn't just some fringe thing anymore. It's becoming a real asset class. Combine that with strong overall market sentiment, meaning investors are feeling confident, willing to take on risk, and you've got a potentially powerful mix for pushing prices up. It's not just retail hype. It's the big money potentially moving in.
That is a crucial point. But, how reliable is that institutional flow? We've seen institutions kind of dabble before and then pull back, haven't we? What makes this time potentially different for Solana?
That's a really fair question. And you're right to be a bit skeptical. I think there are a few differences this time around, potentially. First, the regulatory picture, while still messy, is getting slightly clearer. Think about the Bitcoin ETFs, the Ether ETFs moving forward. That creates regulated ways for institutions to get involved, which is huge for compliance departments. Second, institutions seem to be looking beyond just speculation now. They're looking at Solana's actual tech, the speed, the low fees. They're exploring real-world uses, like tokenizing assets, building DeFi solutions, maybe even using it for enterprise stuff. So it's not just about flipping tokens, it's potentially about using the network for its utility. That kind of interest tends to be, stickier.
Okay, that makes sense. Utility-driven demand versus pure speculation. And then there are even more bullish takes for 2025. Coinpedia, I think you mentioned. They're suggesting $400.
Yeah, Coinpedia is definitely more aggressive for 2025, targeting $400. And they frame it as part of a potential altcoin wave. This idea is pretty common in crypto cycles. Usually Bitcoin moves first, then maybe Ethereum, and then capital starts flowing into other coins, the altcoins, as investors look for the next big runner. Solana, being a major layer 1 with a lot going on, is seen as a prime candidate to catch a lot of that flow if a big altcoin season kicks off. So their $400 target isn't just about Solana itself, it's also betting on the broader market lifting all boats, or at least the strong ones.
Right, the rising tide effect. And then what about the community buzz? Like on Reddit, sometimes that stuff, even if it's just rumors, can really move the needle in crypto, can't it?
Oh, absolutely. You can't ignore the retail side. And yeah, on places like the Solana subreddit, you see chatter, like that specific mention of Binance analysts betting it could hit $650 in the next 6 months.
Yeah.
Now, we have to be super careful here. This is anecdotal, right? It's unverified buzz. It doesn't mean Binance has officially published this or anything. But
Or it shows what people are thinking or hoping.
Exactly. It's a reflection of that extreme retail sentiment, the FOMO fear of missing out that can grip the market. It creates this kind of echo chamber where excitement builds on itself. While you absolutely shouldn't base investment decisions on unverified Reddit posts, it does give you a sense of the popular opinion, the sheer enthusiasm that can sometimes drive those really sharp short-term rallies. It's like a temperature check on market exuberance.
Okay, so we got this huge range for just the next year and a half, $255, $300, $400, maybe even $650 based on different analyses and sentiment. What does this variety tell you? What's the main takeaway for someone trying to process all this?
I think the main takeaway isn't just one specific number. It's understanding the different forces at play and the tension between them. The lower end, say $255 to $300, seems based more on steady, maybe conservative technical progress or continued institutional interest. The mid-range, like $400, really relies on that broader altcoin market heating up. And the higher end, like $650, that probably needs everything going right. The tech, the institutions, and a big wave of retail excitement. So for you, the listener, the question becomes, which of these forces do you think will be strongest? Is it the technical charts? Is it the big money adoption? Or is it the overall market mood and maybe some FOMO? The reality is likely some mix of all three.
That's a great way to frame it. Okay, so having looked at the near term, let's stretch our thinking a bit further out, because the long-term forecasts, 2028 to 2030, they start getting into truly wild territory. Some are calling it cosmic.
Yeah, cosmic is a good word for some of these. If we go back to Coinpedia, they extend their bullish view out to 2030, and they're talking about SOL potentially hitting, wait for it, $1,351.
$1,300.
$1,351, yeah. But again, there's that big if. If the altcoin wave holds. It really hammers home that Solana's fate, at least in these super bullish scenarios, is tied to the whole crypto market growing significantly over the next, 5-6 years. If the broader market keeps attracting capital and maturing, Solana is positioned to grab a big piece. But if the overall crypto winter comes back or lingers, well, reaching those numbers becomes much harder, regardless of Solana's own progress.
That's a huge jump from today, obviously, and even from the 2025 numbers. And Coinpedia isn't the only one throwing out these kinds of wildcard numbers, right? Femex also has a pretty high range.
They do. Femex puts out a scenario where SOL could trade somewhere between $769 and $1,351 in that 2028-2030 timeframe. They definitely frame it as an extreme bullish case, a wild card. Achieving that, it would require like a perfect storm of positive factors. Think about how venture capitalists value, say, a super early stage tech company. They're not just looking at current revenue. They're betting on massive future market share if everything goes right.
So what would that everything goes right scenario look like for Solana?
It means Solana's technology scales flawlessly, handling not just millions, but maybe billions of transactions smoothly. It means its ecosystem explodes with applications that people actually use every day, maybe even replacing some Web 2 apps we use now. Imagine decentralized social media on Solana that's as popular as Twitter, or global payment systems running on it. It also likely assumes a very favorable global economy, pushing money into risk assets like crypto. And critically, it probably means Solana emerges as one of the clear winners in the Layer 1 wars, becoming a truly foundational piece of the next internet, or Web3. It's not just growth, it's like dominant, world-changing growth.
Dominant, world-changing. Okay. And speaking of cosmic, let's bring in VanEck, because their projection, I think, is the highest one we've seen mentioned in the sources. Their bull case for 2030 is, well, it's staggering.
It really is. VanEck, and remember, these guys are a major established ETF provider, very research-driven. Their bull valuation scenario for Solana by 2030 is $3,211. Yep, $3,211. But, and this is the absolute crucial part, they tie this number directly to Solana achieving massive revenue scale use and user adoption. This isn't just wishful thinking, it's a specific demanding condition.
Okay, massive revenue scale use and user adoption. That sounds important, obviously, but what does that actually look like for a blockchain in the real world? Can you break that down? And what are the biggest hurdles to getting there?
Right. It's a big phrase. Let's unpack it. For a blockchain like Solana, massive revenue scale use means it's deeply embedded in the global economy, way beyond just crypto trading. Imagine, like, major banks tokenizing trillions in assets, real estate, bonds, maybe even stocks, all running on Solana. Or think about global payment networks using Solana, for instance, cheap cross-border payments, maybe handling more volume than Visa does today. It could mean global supply chains tracking goods transparently on Solana, or maybe the entire next generation of high-speed online games being built on Solana, with millions playing daily. It means huge transaction volumes, billions per day perhaps, and decentralized apps generating real economic value. And the massive user adoption part. This means hundreds of millions, maybe even billions of people interacting with Solana apps daily, maybe through decentralized social media or event ticketing or digital ID systems. And maybe they don't even know they're using a blockchain. It's just seamless.
Wow. So it becomes like the plumbing of the future internet.
Pretty much. And the biggest hurdle, it's immense. Solana isn't just competing with other blockchains like Ethereum or Avalanche. It's competing with Amazon Web Services, Google Cloud, Visa, Swift, the entire existing tech and financial infrastructure. To reach that VanEck scenario, Solana has to make the blockchain totally invisible to the end user. It has to be as easy and reliable as using the internet today. That's a massive technological and user experience challenge that, frankly, no blockchain has fully cracked yet. But what's fascinating is that VanEck, coming from traditional finance, ties their most optimistic price target directly to that real-world utility and scale, not just hype. They're looking for it to become a fundamental layer of the economy.
That is a really powerful vision, moving from hype to actual, like, global utility. Yeah. Okay, so we have these huge long-term ideas, but how much is grounded in what the charts are showing us now?
Yeah.
Let's switch gears a bit and look at the technical foundations, the chart patterns that some analysts are seeing. These are like the visual clues, right?
Exactly. Technical analysis tries to read the market's mood and structure based on price and volume history. It's about probabilities, not certainties. And Brave New Coin highlights one classic pattern, a double bottom breakout, potentially targeting $280. They see the key level as breaking above roughly $225.
Okay, the double bottom, again, maybe a quick refresher. What makes that pattern significant for traders? What's it telling us?
Sure, a double bottom is generally seen as a bullish reversal pattern, especially after a price has been trending down. Think of it like the letter W on the chart. The price makes a low, bounces, comes back down to test that low again, fails to break lower, and then bounces more strongly. Those two distinct lows at roughly the same level show that sellers tried twice to push the price down but couldn't. Buyers stepped in both times. The breakout occurs when the price moves decisively above the peak that formed between those two lows in this case, around $225. Breaking that level confirms the pattern and suggests the downtrend might be over, and the path of least resistance is now upwards, often towards a measured target derived from the pattern's height, like that $280 level. It basically shows buying pressure overcoming selling pressure at a key point.
Okay, clear signal of buyers taking back control. Got it. Then Crypto Basics charts apparently show an ascending channel, pushing toward $200 and maybe higher. What does that look like, and what does it imply?
An ascending channel is another bullish pattern, but it indicates a more sustained, orderly uptrend. Imagine two parallel lines sloping upwards on the chart. The price tends to bounce between these lines. The lower line acts as rising support, and the upper line acts as rising resistance. As long as the price stays within this channel, making higher highs and higher lows, it suggests a healthy, controlled uptrend. Buyers are consistently stepping in at higher levels. It's less explosive than maybe some other patterns, but it shows sustained buying interest. When Crypto Basics says it hints at even higher targets, it means as long as that channel structure holds, the expectation is for the price to continue grinding upwards along that path.
All right. And FX Street points to a setup for a $250 breakout, but they mentioned solid support at $205. We hear support and resistance all the time. Can you just clarify what support means here and why that $205 level is important for a potential move to $250?
Yeah, support and resistance are fundamental concepts. Support is basically a price level where buyers have historically tended to step in and buy, preventing the price from falling further. Think of it like a floor. So if FX Street sees solid support around $205, it means that buyers seem to consistently show up around that price, creating a strong base. It suggests good demand is sitting there. Now, for a breakout to $250, that $250 level would likely be resistance, a price ceiling where sellers have previously stepped in. If the price can break above that resistance, especially after holding strong support, it signals that buyers have overwhelmed the sellers at that level. This often triggers more buying, both from momentum traders and potentially from stop losses being hit, pushing the price higher. So the strong support provides the foundation for the potential breakout attempt.
Okay, that makes sense. Support is the floor, resistance is the ceiling. And finally, Bidget's visual. This sounds intense. An accelerating bull channel with overbought indicators and sharp momentum tied to new all-time highs.
Yeah.
Uh-oh, overbought usually sounds like a warning sign, doesn't it?
It can be, yeah. You've hit on a really important point. An accelerating bull channel is like the ascending channel we just talked about, but steeper. The lines are pointing up more sharply, indicating really strong, maybe even parabolic buying. Now, overbought indicators, things like the RSI, Relative Strength Index, measure how fast and how far the price has moved. When they get really high, they signal the asset might have gone up too quickly and could be due for a pullback or at least a pause.
So is it good or bad then?
Well, here's the nuance. In a very strong bull market, especially when an asset is breaking into new all-time highs, ATHs, like the description mentions, things can stay overbought for a surprisingly long time. It just means the buying pressure is relentless. The sharp momentum tied to new ATHs confirms this. It means the price is pushing into uncharted territory with real force. So yes, overbought is a reason for caution, a sign that the rally is getting stretched. But in the context of breaking new highs with strong momentum, it doesn't automatically mean a crash is imminent. It just means things are hot. And if we name out all these patterns, the double bottom, the channels, the support resistance, breaks, they're like visual maps of market psychology. They show where the battles between buyers and sellers are happening and who seems to be winning at key moments.
Right. It's not just lines. It's collective human behavior playing out.
Oh.
Okay. So beyond the charts and the specific predictions, what about the bigger picture? The macro wins, as the sources call them. What are the broader factors that could really fuel Solana's rise to these ambitious levels?
Yeah, this is where we get into the potentially massive catalysts. And probably the biggest one everyone's watching is ETF speculation, following Bitcoin and Ethereum.
Okay, yeah, the ETF thing feels absolutely massive. Can you really break down why the Bitcoin and Ether ETF approvals are such a big deal? And what a Solana ETF would actually mean? How does it change the game?
It's truly transformative, you're right. Before these spot ETFs, especially the Bitcoin ones approved in early 2024, getting exposure to crypto was, well, complicated for a lot of traditional investors and institutions. You had issues with custody, who holds the coins, regulatory uncertainty, compliance hurdles for big funds, or maybe just inconvenience for retail investors who wanted it in their regular brokerage account. The ETFs solve all of that. They provide a regulated, familiar, easy-to-buy wrapper. You buy shares of the ETF like you buy shares of Apple. This instantly legitimizes the asset in the eyes of Wall Street and opens the door for huge pools of capital pension funds, endowments, financial advisors managing trillions that couldn't or wouldn't touch crypto directly before. So the precedent set by Bitcoin and now Ether ETFs is crucial. It shows regulators are getting comfortable. If the top two can get spot ETFs, the path for Solana, arguably the next most prominent contender, becomes much clearer. If Solana ETF gets approved, boom. You'd likely see a similar wave of institutional cash needing to buy SOL to back the ETF shares. It creates massive, sustained buying pressure and makes SOL accessible to literally millions more investors through traditional channels. It shifts it from a niche tech asset towards being a more mainstream investment.
Okay, wow. That's a clear potential demand shock. But besides just financial instruments, what about Solana's own network? Its ecosystem in DeFi and NFTs seems to be growing fast. How does that fundamentally drive value for SOL itself?
That's the other core pillar, absolutely. A blockchain's value isn't just its price, it's how much it's actually used. And Solana has been making serious inroads in DeFi, decentralized finance. You see more money being locked up in its lending protocols. Its decentralized exchanges are super active because of the low fees, lots of financial innovation happening there. And the same goes for NFTs, non-fungible tokens. Solana's speed and cost made it a really hot platform for minting and trading NFTs, sometimes even surpassing Ethereum in daily NFT transaction volume. That's huge.
And why does that activity matter for the SOL token price?
Because all that activity requires the use of SOL. Every transaction on Solana, whether it's a trade on a DEX, minting an NFT, or interacting with the lending protocol, costs a tiny amount of SOL in transaction fees, or gas. Plus, SOL is used for staking users lock up their SOL to help secure the network and earn rewards. More staking means less SOL available on the open market. And often, SOL is used for governance, giving holders voting power in how these protocols evolve. So a busy, growing ecosystem directly translates into more demand for the SOL token for practical purposes, fees, staking, governance. It creates this organic demand loop that's separate from just pure speculation. It shows the network has real utility.
Utility, right. And it's not just crypto native users, is it? We're hearing more about big institutions, not just investing, but actually using Solana. What kinds of things are they doing?
Yeah, this is a really important distinction and maybe a sign of growing maturity. It's one thing for a hedge fund to buy SOL hoping the price goes up. It's another thing entirely for, say, a payments company or a big corporation to build something on Solana. We're seeing examples or explorations of this. Things like tokenizing real-world assets, maybe a company puts its supply chain data on Solana for transparency, or financial institutions explore issuing tokenized bonds or funds on the network. Payment processors like Visa have experimented with using Solana for stablecoin settlements because it's fast and cheap. Some companies might use it for internal enterprise applications that need blockchain's benefits without being fully public. When institutions start building on Solana, it's a huge vote of confidence in the underlying technology's reliability and scalability for serious business needs. It means real economic value is flowing through the network, not just speculative bets. That creates really deep, sticky demand.
Okay, fascinating. Building blocks. And finally, there's this external factor, global macro liquidity tailwinds. Sounds like central bank stuff, maybe. How does the broader economy affect something like Solana's price?
You're absolutely spot on. Global macro liquidity basically refers to how much money is sloshing around the global financial system. When central banks lower interest rates or engage in quantitative easing, basically printing money to buy bonds, they inject liquidity. Money becomes cheaper and more abundant. And when money is cheap and safe investments like bonds aren't paying much, investors tend to look for higher returns elsewhere. They move further out on the risk curve. That often includes assets like tech stocks, venture capital, and yes, cryptocurrencies. Think back to 2020 and 2021. Massive government stimulus, near zero interest rates globally. A flood of money entered the system, and a lot of it found its way into crypto, driving that huge bull run. The opposite is also true. When central banks tighten liquidity, raising rates and pulling money out, it tends to suck capital out of risk assets, creating headwinds.
So a lot of these super bullish Solana forecasts kind of depend on the global money taps staying open, or at least not being shut off too tightly.
That's a huge part of it, yeah. While Solana's own ecosystem growth is vital, these multi-thousand-dollar projections likely assume a reasonably favorable macro environment where capital is available and willing to flow into crypto. It raises that critical question. How much is Solana's own merit, and how much is just riding a potential wave of global liquidity? If we hit a major global recession or a period of sustained high interest rates, reaching those cosmic targets becomes way, way tougher.
That's a really important dose of realism. And it leads us perfectly into the final crucial part of this, the considerations, the disclaimers.
Absolutely essential. We cannot stress this enough. Every single projection we've talked about today, from the $255 cup and handle target all the way up to VanEck's $3,211 moonshot. They are all inherently speculative. They are based on assumptions about tech adoption, market sentiment, regulation, the economy, any or all of which could turn out wrong. Forecasting the future, especially in a market as young and volatile as crypto, is incredibly difficult. No number is guaranteed.
Exactly. We've covered this huge range, right? Investing Havens, $255, $480, Bitget's $300, Coinpedia's $400, maybe $650 from the rumor mill for 2025. Then the $1,351 from Coinpedia Femex for 2030, and VanEck, $3,211. These are by definition bullish scenarios. They represent optimistic outlooks. They don't account for potential black swan events, sudden regulatory crackdowns, a major competitor emerging, a flaw in Solana's tech, or just a deep global recession. The market can change in an instant.
Which is why we have to say this very clearly. These are speculative projections. They are incredibly bullish outlooks. They should absolutely not be taken as financial advice, period. Crypto is volatile. Prices go up and down, often very quickly and dramatically. Anyone considering investing needs to do their own thorough research, really understand what Solana is, how it works, the risks involved, assess your own financial situation, your tolerance for risk. Don't just blindly follow a forecast you heard somewhere. That's incredibly risky. Your own homework is your best defense.
Well said. So for you, the listener, trying to make sense of this fast-moving market, what does it all mean? It means taking the information, understand the why behind the numbers, but always keep a critical eye. Appreciate the potential upside, sure, but don't ever ignore the very real risks and uncertainties.
Exactly. See the whole picture. Understand the technical signals, the ecosystem growth, the institutional narrative, the macro backdrop. See how they all potentially fit together. But recognize that the final story hasn't been written yet, and how these forces interact is still uncertain.
All right, and that pretty much wraps up our deep dive today into Solana's really soaring ambitions. We've looked at this wide range of predictions from the hundreds of dollars in the next year or so, all the way out to several $1,000s by 2030 in the most bullish cases. And it seems clear these forecasts are being driven by this mix of technicals, ecosystem fundamentals, institutional buzz, and those big economic tides. But maybe here's a final thought for you to chew on as we close out. With all these diverse predictions and factors swirling around Solana, what do you think is the single most critical thing? The one factor, maybe it's tech adoption, maybe it's the institutional money, maybe it's just the global economy that will truly decide if SOL reaches that cosmic potential. Is it the charts or is it the real-world usage?
It's that interplay that makes it so fascinating and, yeah, so uncertain. Which force ultimately wins out? That's the trillion-dollar question, maybe literally.
Absolutely. And that is our deep dive for today. We really enjoy getting into the weeds like this and hopefully helping you distill some complex stuff into useful insights. If you found this helpful, if you got value out of it, please do consider subscribing. Maybe leave us a comment, share it with someone else who's tracking Solana. Your engagement genuinely helps us out. It helps the channel grow, boosts us in the algorithm, and lets us keep making more deep dives like this one, digging into the topics you care about. Thanks so much for joining us.